Okay, from one market master to another, we also have Sunil Singhania, founder of Abakkus Asset Management, with us. Sunil, good morning. Thank you once again for not letting the hangover get the better of you and be with us. Very happy 2025 to you from all of us here.
Good morning and great wishes for a great 25 to you and all viewers of CNBC-TV18.
Well, they'll be particularly happy to get it from a fund manager like you, Sunil. Okay, well, for starters, I mean, the same question that I asked Samir Arora as well. What is the philosophy a stock picker should assume? Bhagta hua ghoda ke piche, the one that's already performing for us, the EMSs, the e-commerce, the mid-caps, or do you go to the one that did not perform, the HDFC banks, ICICI banks, Reliances of the world?
So, I think the last 4-5 years have been pretty good, Latha, for all investors, and obviously the returns have been outsized, and obviously stocks which were like the obvious ones have not performed as well, but obviously the broader markets has done much better. 24 also is similar. If you actually see Nifty has been more or less like 10-11% in terms of returns for the calendar year, though the broader markets have returned anywhere between 20 to 30%. I think going forward, it's going to be a little bit of a challenge. We're already seeing that. And as you rightly said, there is a lot of momentum in the so-called narrative themes. And maybe rightly so because they have growth. However, as value conscious and, more fundamental long-term driven investors, we are sticking to stocks where valuations at least have certain growth which you are able to build in. And valuations at any price obviously has not been our strategy. So it's going to be a challenging year ahead, though we remain optimistic. And I think as long as we as well as investors are happy with decent mid-teen kind of returns, I think we will follow our same strategy of focusing on fundamentals.
But it's going to be a challenging year, and making those 10-15% kind of returns, according to you, Sunil, is not going to be easy. So how would you construct your portfolio? What would be the advice? What would be the mistakes to avoid this time? And also, do you think earnings will make a comeback?
So on the second question, first, I'm very sure that earnings will come back. Obviously, December will be slightly better than September. But we do expect, the March quarter onwards earning to trend back to the double-digit growth. If that doesn't happen, then India does not qualify to be a growth market and will not obviously attract the kind of P multiples which it has been. But we are quite hopeful with the government spending coming back, monsoon's good, and the festive season as well as the wedding season in full swing. I think from now to June, which is pre-monsoon, activity should really pick up, and so would be the earnings. On your first question, actually, what typically happens is that obviously everyone likes momentum and everyone likes to be in stocks which are moving. And what has happened over the last, obviously, 6-12 months is that the segments which were mentioned, like EMS, to some extent, even the narrative sectors like defense, railways, after a big jump, they have sort of slowed down a little bit, but there is still interest. And there is this segment, I call it, the market cap from 101 to 250. I think that is the most overpriced segment of the market, and largely because mutual funds which are mid-caps have to compulsorily invest in that segment. And there are good stocks there, but if you see the valuation, nothing is below 60-70 PE there. So I think there is a sort of a issue of money coming in and therefore funds having to buy the stock. And obviously when momentum is there and the price keeps on moving, the others are forced to invest in that. So I think it's going to be a tough time sort of resisting stocks which are moving up. At the same time, valuations at some point of time will start bearing on the stock price movements.
So since stocks where the market capitalization, if you rate it from highest to lowest, between 100 to 250 you're saying is highest, where we've seen maximum exuberance and valuations, etc. So would you bet with large caps and even small caps then?
So I think the good thing about India is that we have so many listed companies, and though our view is that IPOs are significantly overpriced, there are some decent companies which are also going to be listed over a period of time, which are already listed and going to be listed over a period of time. And as a portfolio manager, all you need is maybe 5, 6, 7 good picks in a year, the new ones, and you are home. And I think with this large number of companies which are listed and the markets as well as the economic environment being so dynamic, from time to time one ends up, finding a few bets which you can look out for. So I think at this point of time, what we are trying to do is in our funds, which are like we have an all-cap fund, which is more a mix of large and mid. We have increased our weightage slightly to the large cap. On the other hand, we have a pure mid and small cap fund. There we are 100% mid and small cap. But I think what we're trying to do is shift towards companies where earnings are a little bit more visible and more sustainable in the near term also. So our experience over the last 6 months has been that when the markets have also been a little bit challenging, companies which have demonstrated resilience as far as earnings have ended up doing much better than otherwise. And I think little bit of more focus on near-term earnings is also what we are more concentrating on.
Sunil, interesting you mentioned that IPOs made money, but you're saying that many were overvalued. Money Control did a study and 60% of the IPOs are actually even now making money for the investors. Of course, some of them are outstanding, like that Jyoti CNC, I think it was 300% or something above issue price. You don't think the IPO market is frothy, is it? You're saying that people are getting away with unreasonable valuation?
So I think right now the interest level is like crazy. And when interest levels are such crazy, you obviously will have in the near term, pricing also reflecting that. But, we are not here from a 3-6 months perspective, I think we have still not seen a major drawdown as far as the broader markets are concerned. The markets have been flattish last 6 months on the Nifty, but broader markets have been, I would say, pretty decent. I think once the valuations start to reflect the reality, that is when some of these companies, at least as stocks, would face a challenge. And the other thing is, Latha, what happens is when a company comes in for IPO, obviously there is a very limited history of performance in various cycles. And one is relying completely on the guidance given from a next 2-3 years perspective from the investment bankers and management, and no one gives negative guidance. Everyone's guidance is superb. So a company which has made 100 crores over the last 20 years cumulatively is expected to make a profit of 400 crores in the next 2 years. And you are willing to give the benefit of doubt till it comes. So I think let the result season start for these companies in the next 1 or 2 years. We'll know, how many of them end up doing better. But as I said, there are definitely good companies which are hitting the market. And there are companies which are maybe good, but overpriced. And then there's a third lot which are not good and overpriced. So, one has to be careful about the 3 buckets.
Yeah, absolutely. Sunil, tell us what could be the red flags that you would watch out for? I mean, not a worst case, but likely red flags.
So the good thing is that India still stands out. I am very sure that we will head back to the 6.5% growth rate. Obviously, Trump coming in will lead to a little bit of rhetorics. Obviously, he's known to speak a lot. But, every politician speaks a lot and not everything what they speak ultimately gets implemented. So once he takes power, who comes to power, we'll see what happens. But we are already seeing some movement on the currency side. Indian rupee has been resilient but still depreciated by 2.5-3% over the last couple of months. I think that movement has to be watched very carefully because depreciating money will push back maybe the likely FI inflows which we are expecting in 25. The other red flag is purely earnings. I think as long as corporate India keeps on reporting earnings which are 12 to 15% year-on-year growth, I think the macro are pretty decent. We are heading to the next 4 years, 5 years of this new government. Hopefully the budget will be pro-growth, which always happens in the first 2-3 years of a new term. We have decent foreign exchange reserves. I think there is a lot of government spending which is lined up. Companies are quite optimistic. And we are also coming out of maybe a 12-15 months of a lull as far as consumer spending is concerned, and that should also come back. So I think we are heading to a nice 2-3 year setup. I think the only thing we need is, the corporate profit to come back. And that also hopefully from March will come back. From a global front, as I said, rhetorics and talks would maybe cause near-term ups and downs, but I don't see a major issue even there.
But doesn't it worry you that urban consumption has been falling? I mean, not just the warning from Godrej. Did you just see the Bajaj Auto sales also down, about 1.5% year on year? Will that not be an issue?
So, there are segments, obviously real estate, everyone was selling apartments in Bombay at 1 lakh and 1,50,000 rupees a square feet. Now there are only that many, Indians would be able to afford those kind of apartments. And suddenly, you have buildings coming in left, right and center. Everyone is going in for redevelopment. And there is going to be a lull at some point of time, though we are quite optimistic about the real estate sales, but I don't think prices can go further from here. As far as auto is concerned, I think auto in India, two-wheelers and four-wheelers on the passenger side, has never seen volume growth consistently of more than 5-6% year on year. So I think it's not a surprise. And the other thing which you have not to forget is that the number of players are increasing. So maybe the volume overall is growing at 5-6%, but the listed guys are not able to retain their market share. Which is happening in a lot of places. I was speaking to a major tile company, and this is the segment is growing, but there are new players coming in from Morbi who are now selling in their own brands. So it is getting a little bit more competitive, and I think that is going to be the case. I think one thing which we should not forget, Latha, is that capital has been available in plenty, and hopefully that will be available in plenty. Now, capital raising is good for the companies, but we also have to not forget that it breeds competition. Because if a company is able to raise 1,000, 2,000 crores of capital, the ability of that company to compete with existing players increases quite meaningfully. And we are heading into a phase where maybe the ROEs, which was 17-18% for Indian corporates on a consistent basis, might fall to maybe more around 15-16%.
Okay.
That's a good point. Thank you, Sunil, for joining in. So this capital breeds competition, and that could be a risk for some of these existing companies.
And not just that, I think, Sunil, it was such a beautiful 180-degree perspective on sectors, competition, unlisted competition,
Thank you.
The India growth. Thank you very much for giving us such a nice wrap to step into 2025 with enough perspective and the optimism that India is a growth story. Thank you very much for joining us on Outlook 2025.